Good evening and welcome to the FITT Show. Financial information for today and tomorrow. That's what the FITT Show stands for. And our motto is we want to help our people get their finances in shape. My name is Bobby Kinzer, and that's Thomas Doty. We are glad to be with you this evening, as we always are. This is a great time because we're talking about financial management, managing your money. We feel this is a very important subject, especially in these days and times with the, I guess I can say, though, post-pandemic era that we're in. A lot of people were suffering with how to handle and manage their money, even before the pandemic. So we just want to provide some strategies and methods and concepts that help you enter into the financial mainstream and begin to start creating wealth. Last week we talked about taxes. And if there's any other shows that, like our show of last week, taxes, or the previous shows on personal money management, investing, please go out on Facebook and look under the FITT Show, FITT Show. Also, you can go to YouTube and find that out too. So while I'm here talking to you, I want to remind you, if you can please make sure you click on the like button with the thumbs up and the heart and the happy face buttons, because that helps us get traction and it expands our reach to more people. And you can't hit it enough times. Hit it several times, many times you can, because it really does help us out, and we really, really appreciate it. Dude, how you doing this evening?
Absolutely fantastic.
Well, you look absolutely marvelous. And remember, it's not how you feel, it's how you look, and you look marvelous. But no, we got a good one this week. We're going to be talking about risk management, how to cover your behind. And before we get into that, I'd just like to ask you, though, what is the riskiest investment you ever made, and how did you mitigate the risk?
Oh, wow, probably the riskiest investment I ever made was in Bitcoin, and I had to learn a little bit about it. I still don't think I understand it fully, but I felt the need to invest. My son kept pushing me, saying I should get in early, and I did. And I guess the way I mitigated that risk was I didn't put a lot of money in it. I only put about $5,000 in it. And fortunately, I'm up double what I put in right now, even though it's gone through a bunch of drops the last couple of weeks. But still glad I did it. I'm still learning about it, but that's probably the risky investment I ever made.
The riskiest investment I made was I got into penny stocks. A friend of mine was into it, and he was well educated in the penny stocks, and he would give me the tips. And penny stocks is just that: you buy stocks for $1, and they do a private placement before they come out on the market. And as soon as they enter the open market, they usually go up, and that was really risky. And I did that for a while. And how I mitigated my risk was I was getting advice for somebody who really, really was into the business and knew it very well. So that's how I mitigated my risk. But let's talk about risk management, though. Let's talk
Okay.
about that and how that applies to insurances and things like. What is risk management?
Well, management is primarily to make sure you cover all catastrophic losses that you may have, and you want to cover all facets of your life, whether it's driving, whether it's getting sick, whether it's getting disabled, your home, uh, all of those things. You want to make sure you're covered, so you don't have to pay a large amount if something bad happens. It's kind of the first step to building wealth. Not the first step, but it's one of the major steps in building wealth, in that you have to be protected so you don't have a big loss that you may not be able to handle, or may force you to borrow money or declare bankruptcy. A lot of other bad things can happen if you don't have the proper insurance and risk management.
Yeah, and that's so important because so many people tend to want to skimp on insurance, because the interesting thing about insurance is I just want to pull up a slide here. bear with me, is that you really though, can you see that screen?
Yes, summaries and takeaways. There we go.
Yeah, okay. Well, this is one of the things, the interesting thing about insurances is the basic premise is insurance, you need to, buy it before you need it. And the other thing is that it's the best thing to make sure you have all the right policies in place. And we're going to talk about that a little bit further into the show. And it's better safe than sorry. But I'm going to talk a little bit about asset protection, though, what goes in line with insurance. A lot of people don't see the differences between the two. But asset protection refers to your strategies that guard your wealth, your tax, from taxation, from seizures, from creditor claims. Asset protection helps insulate assets in a legal manner without engaging into legal practices or concealment. Like some people be trying to hide assets or try to do tax evasion or get into bankruptcy fraud. Asset protection absolutely helps you hold your property, helps you protect your assets, plain as simple as that. And joint held property held as tenants by entirety can work as a form of asset protection too. And just right quick, in case some people might think, but you still a little bit don't understand about asset protection. Asset protection, the main thing it helps you with these particular things like professional malpractice liability, if you have a business, lawsuits from former business partners, personal injuries suffered on your property, personal injuries resulting from motor vehicle accident, and liability arising from misconduct. Because you have a lot of sexual harassment suits and things like that. And asset protection actually helps you protect your assets. Plain and simple, though. So let's get into the next subject, though, and that would be um, what are the types of insurances that people need to understand about?
We're going to walk through a few of them. We'll start with health insurance. That's the basic insurance that most people have to, uh, you know, take care of their health. Make if you get sick, you have some insurance. A couple things to look out for. And of course, when you get 65, it changes. Medicare kicks in, and then it's a whole different ball game. But make sure you have the right deductibles. And it's kind of tough when you're young because a lot of times they give you choices of low deductibles with high monthly fees, or high deductibles with low monthly fees. So it's one of those things you have to assess your own health situation, look and see where you are, determine how much you need to pay, what deductibles you need to have, and most companies give you choices of which one to choose. So take your time and don't wait to the last minute and sign up for something quickly. Think it through. Make sure you got the best plan for you and your family, if appropriate.
Now, dental insurance is typically separate from medical insurance, but it's not as less mandatory. Anyone can suffer a toothache, gum disease, cavity, or even a broken tooth, all of which are very expensive to treat. Secondly, everyone should be visiting a dentist twice a year for cleaning and checkups. So a lot of people don't have dental insurance in their health plan, and you have to pay extra. But here's a tip for some people, right? Once you get on Medicare, you can choose to be self-insured because most dental plans do not cover the large items like crowns and implants. And if you're just getting your teeth cleaned, twice a year, you might save money just insuring yourself by just paying to go to get cleaning instead of paying those premiums, and you're not really using it for the bigger items like crowns or implants, things like that, though. But that is
Yeah,
something that's your personal decision and a personal choice.
yeah. Just a side note before we get off of dental insurance, I've told my kids this. Just because you do everything right, I've always taken very good care of my teeth. Haven't had a lot of issues, but just had to get an implant put in, and those things are crazy expensive. I mean, the total, once all is said and done, it'll be like $7,000. So even if that's best case. If you do everything right, you're still going to have some issues. I can't imagine what it's like if you don't take care of your teeth. So that's a very important one. The next one is disability insurance, and a lot of people don't look into this, but they should. Actually, when you're younger, like between 25 and 45, you're more likely to get disabled than you are to die. I mean, everybody thinks about getting life insurance for death, but disability insurance is an important one because it ensures that steady stream of income, and you should at least consider looking into it if you're in that 25 to 45 age range to consider getting some disability insurance. It's not overly expensive, but it is something you should consider.
And then there's life insurance, which most people definitely know about, but this is where some people try to skimp on, though, because, they just don't like paying those premiums, especially when they're younger. They don't believe they need life insurance. But life insurance can actually be used as an investment tool because a lot of life insurance policies have cash values, and some of them are tied to universal life, and then you got term, and then you got whole life. And I'm going to talk a little bit about whole life versus term insurance. But life insurance is needed if anyone relies on your income or depends on your service, and such as your family. And then we all know that it covers death expenses. So life insurance is so important, so you must consider that your need for life insurance. If you have a business partner who will need to buy out or share the business if you pass away, you need life insurance. And since the average funeral costs these days are 7,000, 9,000, actually it goes way up more than that. But that's just the low ball amount. You even need life insurance. And if you want to bury without sending your family into debt, life insurance is the way to go. Just want to talk a brief minute though about the difference between um, whole life or universal life and term. Universal life, whole life has cash values. Usually the premiums are much higher because it has these cash values. But term insurance doesn't have cash value and it's way more cheaper. And so with some investment strategies is get term insurance, pay the lower premium, and the difference that you're not paying because it's a whole life traditional insurance policy, invest the difference. Because normally the traditional whole life insurances, whole life used to be about guaranteed maybe 4%. I'm not sure it's around there, but it's that low. And the universal was usually tied to the stock markets, and you get something better than that, maybe 8, 9. But why not take the difference? And if you invest in the stock market last year, you can get anywhere between 20 and 30% return. So that's the concept of the difference between traditional whole life versus term.
Okay, homeowners and renters insurance. That obviously protects your home and your contents if you are a renter. But again, that's one you need to have, whether you own a home or rent, because things do get stolen, things do catch fire, things happen. So you should have insurance. One tip that I do personally, and I've done it for a while, but most people, when they sign up for homeowners insurance, they typically set the policy to equal the value of the home. And a long time ago, I pushed back on the insurance agent, and I'm like, okay, let's say I had a house for $400,000. That's the value of the house and the land. The land's worth something. So if the land's worth $75,000, it'll be pretty hard for somebody to steal the land or for the land to catch on fire. So I would typically insure my home for the value of the home. The insurance agent would always try to push the appraised value of the house, but my argument was nothing's going to happen to my land. So again, I'm the cheap guy who's always trying to save a penny everywhere I can. And it's not something that you should do. This is what I did. This is one of the things that again, one of the little cheap things that I do. But I always only insure the value of the home, not the value of the home and the land.
Just want to add another thing about homeowners and renters insurance. They have certain two different components, which is liability coverage and property coverage. Liability coverage pays for the costs associated with an injury on your property, and if someone slips and falls on your steps, your liability policy will pay for the defense if they sue you. It will also pay for any damages the injured person is awarded. And liability cover pays out for like dog bites and all kinds of things when people sue you. So you can have that both um, for homeowners and rental. I want to talk a minute quick about flood insurance. Now, flood insurance, homeowners insurance covers most sources of loss to your home, but policies typically exclude floods. If you need a flood insurance, you're likely to get it from the National Flood Insurance Program, which is a government program, and they might be discontinuing that program, but it was there for people, and that which was really dope, encouraging people to move into flood zones because they saw the government was covering them, so they were moving the flood zone, and when they get a flood, they get a claim from the government because of the National Flood Insurance Program. But if you need to find out if that program is still available if you in floodplain areas, and a participating agent you can get that coverage from. In some states, it's not in all states. You can instead buy coverage through a private insurer. The option to buy flood insurance policies is relatively new and may not be available where you live. There are also risks and private policies that can be avoided by using the National Flood Insurance Program, but you need to check that up. Go Google it. It's the National Flood Insurance Program, the NFIP. Dope.
Okay, car insurance. Everybody has to have car insurance. Keep your policy up to date. You don't want to have a wreck and not have a car insurance. Take a look and make sure your amounts for each item, uninsured driver, all of those types of things. Make sure they have to be at a state minimum, but make sure you are comfortable with the amount that you have. And if you have an older car, make sure you understand the value of that, because if the car is very, very old, it may not be worth insurance, in which case you could take off the comprehensive part of it and maybe lower your insurance rate. But at least take a look at it. If you have a car that's over 10 years old, you probably would not get much from the insurance company if that car was totaled. So make sure you're not insuring something that doesn't have much value.
Next one is what they call umbrella insurance. And this umbrella policy provides coverage above and beyond the liability protections provided by all other insurance policies. If your homeowner's automobile policy provides just a maximum of $250,000 in coverage, and you are sued for $1 million, the umbrella policy will pay the outstanding liabilities. And so some people accept the state required minimum, and some people accept what their agents recommends. We suggest you review each component that best fits your situation. But an umbrella policy is very important because it covers you beyond. Just like with your auto insurance, a lot of people's the maximum is anywhere between 250,000 to 300,000 personal liability. Nowadays, these people see you like somebody like Dope riding that very nice looking Porsche, and they will try to sue you for everything you got. And once again, this is a way to protect your assets is by having umbrella insurance.
And lastly, we got pet insurance. A lot of people have pets. They do get sick, and it can be expensive. So at least consider what the rates are and see if it fits to know how much you'll have to pay each month versus getting stuck with a large bill because your beloved animal gets ill. gets ill.
And that's really a lot of people think this is crazy, but some people love their animals more than they love their people in their family. And in fact, there's animals can have chemotherapy for cancer, heart surgery for heart disease, hip replacements, and many other treatments available in human medicine. So if you're a pet lover, it may pay off that you have health insurance, pet insurance. And though I know a lot of people that that spend a lot of money on their dogs. Actually, they treat their dogs better than they do humans.
That's for sure. And don't think we're saying run out and buy all these insurances. Look at your situation, determine what you need, shop around, and rich folks have been doing this for years. They make sure they're covered. They make sure they don't get stuck with any big bills, and that's all we're saying. Take a look at your situation, see where you need insurance, and go from there.
Talk a little bit about group insurance, though.
Group insurance, I've used that quite often. A lot of trade groups will have special rates, and it's because you have a large number of people that lowers the overall cost of everybody's insurance. That's why companies can offer favorable rates to their employees because they have a large number of people. But things like AARP offers different insurance rates. Costco has a tremendous insurance program. That's what I use now for my home and my car. The government, military has group insurance rates. There's a lot. Look at your trade group. If you're in a trade group in your profession, they probably have some type of group rates where you can get discounts on things. Penn State alumni is always sending me information about group rates on disability insurance, group rates on life insurance. Those are all things you should look at that can help you make sure you're covered and protecting your wealth. And because you do need to always shop around, always look around to make sure you're getting good rates from whoever you have. I know people who have kept the same auto insurance for years, and that's okay if if it works for you. But I've always been one to shop around and make sure I'm getting a competitive rate. And I do that on everything I have. So just
It's
a
so
suggestion.
interesting though that you state about comparison shopping. That's one thing a lot of people don't do is shop around because certain things they do, like uh, you know, Costco's versus BJ's, stuff like that. But some people don't think about shopping around for auto insurance to get the best rate, shopping around for life insurance to get the best rate. All these other insurance we're talking about. It, you need to shop around. And nowadays, with the internet at your disposal, you can really sit down in your house and shop around right there on the net and get the best cost. I mean, it's the same thing with our cell phones, though. People tend to stick with what they've been dealing with the most, what they feel comfortable with, and especially like cell phones. People don't comparison shop because they like the one particular phone, they stay with it. But I know a guy that every 6 months he changes his of the carrier that is because the rates are different and he saves money. Same thing with insurance. You can do the
Yeah,
same thing with insurances.
yeah. People, and I think the younger kids do. I think they switch a lot more often, and so insurance companies are now offering loyalty type perks where if you go 1 year without an accident, they may lower your rate or lower your deductible, things of that sort. And I think that's because the newer generation checks other rates a lot more often than us older folks do. We tend to stay with what we've had. I got a lot of people who swear by the same insurance company they've always had. Would never comparison shop. They've always been treated well. If that works for you, so be it. I shop everything. I think I told you before. I open a checking account whenever somebody offers me a lot of money. I'll take $500 to open a checking account any day of the week. But that's just me.
Yeah, but we want to make that note to make sure you do shop and compare. We're talking about insurances and risk management, but that applies for a lot of things, you all, because the name of the game is not how much money you make, it's how much money you keep. And it's what you do with the
Sure.
money that you have, that you make. So you don't need to be given no more money than you have to. That's all this is about. Uh, no, let's go into the topic of can you ever have too much too much insurance, period? I'm talking about across the board because that's the question that is asked a lot.
Yeah, I mean, you should only have insurance for a particular purpose. Uh, like, for example, when I started having kids, I got a group insurance policy because I had to make sure that if I died, my current income, my future income, their college, short of less my savings, all that stuff was going to be taken care of. But once my kids were growing and on their own, and that's why I set it up. I think I got like a 25-year policy, and once my kids were all grown, I got that policy disappeared because I knew I wouldn't need it anymore. So insurance is for a particular purpose. When that purpose goes away, then you shouldn't have it anymore. Same with disability insurance. You reach a point where the loss of your income isn't as uh, a big a hurdle as it is when you're younger and you have so many more years that you have to have cash for. So it's for a particular purpose. And once that purpose is gone, you don't need it anymore. Same thing I talked about with the old car. You got a 15-year-old car, you don't need comprehensive insurance on that because it's not worth insuring. So those are the kind of things you have to look at and make sure you aren't paying for insurance when you don't need it.
Because a lot of people do sometimes overpay for the insurances, and especially if as you get older and you don't need the same amount of insurance as you once did. Though speaking about uh, how much insurance that you need or saving money on insurance, we're not saying compromise protecting your assets because you want to save some money. We're not saying that either. What we're saying that there is a balance in what you need to spend and what you have versus what you have to spend and what you need to spend than what you may be overspending. For instance, though, explain to them about what you do with your home mortgage.
Which, as far as
Well, as far as you only insure not the
oh
land,
yeah,
but
right, exactly. We talked about that earlier. Yeah, I only insure the value of the home, and again, that's okay on a $500,000 house. If it's 20% value of land, that's a 20% savings on your insurance. Again, I don't think anything can happen to your land. I mean, it could. Somebody could drop a bomb. Maybe it'll put a hole in it. But I'm not worried about that. So I'm not going to cover that. I want my house to be covered fully, full replacement value, all risk, all that kind of thing, but only for the value of the house.
and remember, we're only saying what we do, and we're not suggesting that you do these, but we're just letting you know these alternatives are out there. It's your personal decision on what you do. We're just letting you know what's out there and some of the, like I said when we started off, some of the concepts and methods that you can use. But each uh, conversation we have about a particular topic, remember, everybody's particular situation is different and everything applies to everybody different. So you need to always seek advice from a financial advisor, a qualified financial advisor. It's very important. Though, one of the three main things that insurance you should cover, because some people say, well, okay, well, what should I really be covering? Some people get confused. There's once again, it's such a personal choice, but the bottom line, three main things you should make sure you have covered is your current and future income, especially if somebody is relying on it. Your debts, because you don't want to leave your debts to your family members should you pass immediately or when actually if you live a long-term life. I don't think it's fair to leave debt to people. And then the last one is plain and simple death costs. We know all about being covered and everybody wants to see their loved one put away, nice and well. But I told my wife, because we're gonna be in this house until I probably pass. And I told her, that left corner back in the yard, you can cremate my body and buy that little urn. Don't even buy an urn. Just put that mug in a Kentucky Fried Chicken box, and I'll be happy. Save the money. But that's once again, like I said, and we say though, right? That's my personal choice. I'm not advising you
Yeah.
to do that, but that's what I would do, and I'm not joking. Though, want
See,
to give a shout out, my man, to our two frat brothers who are tuning in, Rob Robinson and Charles Clutch Macago. A5A in the house, you all.
hey,
So,
Bob. Hey, Bob,
uh-huh.
you joking about being in a Kentucky Fried Chicken box in the back. That's the one advantage of being cheap like I am, because I think it'll come back and haunt me when my kids have to make a decision about me. Because I think the first thing will cross their mind is Dad wouldn't want us to spend a whole lot of money on him, So
Dig it.
he'll be all right. So
Yeah.
I worry
That
about I do worry about that.
Dad really wouldn't mind because that cheap, tight bastard. That is so true. Though the other thing, when it comes to, how much should you be insured, or if you're overinsured or underinsured, you should sit down with a financial advisor and assess your financial needs before talking to an insurance agent. Because I mean, I used to be an insurance agent, certified insurance agent, stockbroker, and all those things, but sometimes people are trying to get commissions as opposed to providing you with the proper products that's for your situation. And I'm not saying that it's all insurance agents. I'm just saying it is probably best to get some advice from a financial advisor before you go and talk to an insurance agent, so that you make sure you get the proper product for your proper, appropriate situation. And last, remember this: if we're saying that you can cut some of the costs by, like Dope was saying, you don't need to insure, 100% of your house is 20% of it is covered by land. You can reduce it, but remember this: if you reduce the coverage, make sure you understand if there's any penalties for reducing the coverage, because sometimes there's things in there. So while I'm saying that, with everything, you need to read the fine print. I'm talking about in your insurance policies, all the policies we just talked about, all the 9 policies. You need to read them clearly, because there are penalties like term insurance. Term insurance doesn't cover you all the way to only a certain age. And you need to know what that is if you're going to use term insurance. It's not until you die, like life insurance. Term insurance is just that. They have limits to, sometimes that could be at 70 or 80, and it cuts off, or even the premiums skyrocket as you get older. So that's why you need to read and understand what you are getting involved in. And that's everything we talk about when we talked about to you about financial management. It's all about understanding. You don't have to have a college degree in finance to manage your finance. You don't have to be no certified or have any kind of designations to understand your money. And that's something that we always talk about on this show. You don't have to be the specialist, but at least understand that when you sit down with a specialist, that you can clearly articulate what you want to do, what your goals are, what your time horizons are, but don't let them tell you they working for you. You don't work for them. Hey, Dope, let's do a little. This is like a little extra uh, tidbit we're gonna add into this right now, because it falls into this, but it's a little different. But warranties. Let's have a little talk about warranties.
Yeah, that's so many companies now are offering warranty slash insurance on your home, on your on not your items in your home, your refrigerator, your stove, your air conditioning unit. You see it, Car Shield, the commercial every 10 minutes for buying extended warranty on your cars. When you buy a new car or even a used car, they offer extended warranties on your cars. And a lot of people like those because it makes them feel comfortable and they know what their costs are going to be. I personally don't only I always think that somebody's selling something. They can't be selling something at a loss. So they must it must not be good for you. And I think what happens in effect is you get enough people, it works for some people don't use it as much. And so they end up the insurance company or the person offering the warranty ends up making money. But there's a ton of those, and you have to gauge what you're comfortable with. If having your amount of, let's say, car expenses fixed to that monthly premium, knowing you won't have any other major expenses, if that helps you sleep better, so be it. I've always felt that, well, mostly I try to keep newer cars that are under warranty, but I've always felt that I'll take my chances, and if I have a bill, I'll just pay it. But again, it's what you're comfortable with.
And though for me, it must just been my luck because I had a Saab, and if I didn't have that extended warranty, I would have been jacked up. But I had a Asian car like a Hyundai, and I never had no problems with it. But when I had those Saabs, and when I had the BMW, and when I had those Mercedes, that warranty came in handy, and I was so glad that I had it. And it must be my luck though, because even in my house, the daggone refrigerator went, the daggone stove top went, the daggone oven went. I mean, the heater, the water heater went. I'm like, I felt like Green Acres. I moved the house on Green Acres, man. Everything was going wrong. So for me, I was so glad I had it. But for other people, you spending all these, especially some of these warranty companies, home warranty, American Home Warranty, and all that. I don't even know the name. I'm not trying to say their names, but you pay all these premiums, and then when you come to replace the items, they don't give you the full replacement for it, or they talking about, oh no, we only cover the part. But for me though, I've been using the insurance. It's it's it depends, like you said though, on you. If you want to sleep at night, But my thing is buy some good products, man. That's why the cars I choose now, you know, like you said though, I knew that a Zera Hyundai was going to not give me no problems. You know why? They gave me 150,000 mile bumper to bumper, including the tires that they got punctured coverage. I'm like, oh, I'm good with this. This car must not go because they ain't trying to pay you. You know what I mean? I mean
Right,
that's the
right,
logic, right? They giving 150,000, everybody else giving 100. That must mean they ain't worried about their car. But anyway,
right.
that is that. But remember, understand the cost and the deductible.
Read the
You
fine
must
print.
understand and read the fine print, you all. You got the devil is in the details. No, you know what? Told, I told myself I'm gonna stop giving the devil credit. Like Mo was talking about, you know, I'm stop saying the devil is the angel is in the detail. Like people talking about, I'm gonna be the devil's advocate. Why the hell you want to be the devil's advocate? So now on though, I'm gonna be the angel's advocate. So
Okay,
the
that
angels in
sounds
the
better.
detail. The angels in the detail. So read the fine print. That's basically what we're saying. Hey, dope, it's time for us to wrap this ship up, and let's take it home, man.
Okay.
Um, Rob said a wise man told me it's better to have it and not need it than to need it and not have it. And guess who that wise man was, dope? You. How'd you know? You remember that? He
Because my
said you
mother used
told.
to always tell me that. My mother always, it's better to
But you
have and don't
told
need
Rob
than to
that.
need and don't have. Yep.
Rob, I'm glad you listening to your frat brother. Because it's more than when you listen to me. I ain't lying. No, I'm just kidding. Love you, Rob. All right, dope. Let's take this ship home, buddy. So, Take it away, Dope.
Okay. First things first, make sure you have the insurance you need. Look at your own situation, assess what you can afford to pay, and what you can afford to lose. Find a happy medium and get the insurance that you need.
Second, review periodically your basic insurance needs because, like we say, it changes. As you get older, things change. And it don't have to be necessarily older. Things change. Life is all about change and we must make adjustments. So review your insurances periodically. Like that car you bought new, but now you had it 10 years, you might need to review that policy.
Yeah. And don't be afraid to shop around. Okay. Comparison shop. You might be able to find a much better rate. Okay. So take a look around. Again, if you have those group plans that have a lot of people and are offering low rates, take a look at them. But as we always remind you, read the fine print, make sure you know what you're getting into.
Oh God, don't I'm laughing because I'm getting ahead. And the next one is consider group insurance to lower the cost, like the AARP, your university or colleges, alumni association, the trade groups, whether you with the union, 609, 445 union. Costco's have, I was told, have some of the best group policies, and you can get a lower cost because of that. And finally, though, if you're traveling the road of life and don't make the right insurance decision, don't blame somebody else. It's your own ass fault. Oh, I love that one, though. That was a good one. You came up with that one, man. Remember, if you make the wrong insurance if you make the wrong decision on the road to life, it's your own ass fault.
Hey,
Oh,
I gotta
good.
shout out. I gotta shout out my wonderful niece who bought me a light. So if you can see me better, it's because my niece Teresa, the owner of Paul's Play Doggy Daycare in Cleveland, was thinking about her uncle and sent me a gift of a studio light. So love you, niece.
Oh, that was so nice of you, Nisi Pooh. And what's the name of her company? She's probably selling pet insurance. What's the name
No,
of
Paul's Place. She owns a daycare center for dogs.
Yeah, for pets. That's what I'm saying. Maybe
Right,
you
right.
might need
She
to
don't sell
start selling some.
insurance.
Oh,
She
okay.
don't sell insurance. She's
I
just a
don't know.
sweetheart.
Oh, that's good. That's good. That's good. Oh, guess who's listening, Dope? Taylor. What's up, Taylor Doty? Glad you're here
Hey,
checking us out. Okay, now we've come to the end of the show, and we like to open it up for any kind of questions that anybody have. If you have a questions, please put it into the comment box. And by the way, keep clicking that thumbs up. You can't click it enough times. You all click it as many times you can, because that's what Facebook reads. The like button, the other button, the heart, and the happy face. Click on those as many times, y'all, so we can. Oh yeah, somebody's out there doing it. I'm loving it. I'm loving it. That's great. Keep it going. So if you have any comments, please put them in the comment box because we love comments, and also putting comments in the comment box also gives us traction and expands our universe to the people that we can reach on YouTube. Remember, we're here every Thursday from 8 p.m. and normally we go anywhere between 30 and 50 minutes, depending on the topic. We try to keep it short and sweet. Dope, anything else you want to leave the people with before we go?
no, just in the comment button if you have any criticisms or anything you think we can do better, any topics you'd like to hear us talk about, put them in there. We are just trying to help you.
No, no, Dope, I like to back up on that one. Um, on the road to critical negative comments, that's your own ass fault. Don't be putting them in the daggone comment box. No, I'm just kidding. I'm just kidding. But so look, this is us. Um, remember, if there's any other show, this is our ninth show, Dope. Woohoo! We can go on our 10th show, man. And all our other shows are out there under Facebook, you all. the FITT Show, FITT, financial information for today and tomorrow. You can look at our past shows on YouTube also. If you don't have Facebook, you can go to YouTube. But please, you all, please share this information with your spouses, your brothers, your grandparents, and by the way, you're never too old to have a new goal. This information is valuable, you all, that we putting out there. Go back there and share it with other people. You can send them there and they can listen to them. They're very short. We try to keep it concise. And we thank you all for being out here tonight. And just want to make my last uh, uh, disclaimer, because we're not certified financial advisors. We just provide you with financial education for you to go and use and apply by looking at your personal situation and sitting down with somebody who is a qualified financial advisor. Isn't that right, Dope?
That's for sure.
Cool. All right, so that's it for us. Did I leave anything out, Dope? We just want to make sure people are.
Nah, you covered it all.
Well, before I leave, because I can see the buttons now. Y'all need to click a couple of more buttons, like buttons for us down there, and I can see who you are. Yeah, I see who you are out there. Just click a couple of more buttons out there, the like button, so we can get some traction. And oh, there we go. Thank you very much, my people. Let my people go, Dope. All right, Dope. Okay, I ain't going to wait this anymore. Great show. We have a comment coming in. Is it a question? I like that. Never too old. Okay, good. All right, Dope. That's it for us, man. Oh, Dope, man. They lighten us up with hearts, like buttons. They man. Y'all make us not want to get up off this camp. All it, Dope. They killing us out there with those. That's what I'm talking about, y'all. That's who's going to give us some traction, because we want this information to go to as many people as we want. And Dope, tell them why we doing this. We ain't making no money. We ain't selling products, right?
Nope, we're just looking to pass on information. We've been lucky, blessed, successful, and we're just passing on what we know, what worked for us, and hopefully you can find a couple of tidbits that will work for you.
And Dope, these mugs are clicking like a mug. I
Good.
love it.
That's because you've been on them.
I love it. And look, and if you, hey, now what's up there now? Hey, Murray K. Nell is out there again, Dope. Great advice tonight. Thank you very much. Thank you very, very much. And Dope, if I was on them and you didn't click on the button, you know what, Dope? That's your own ass fault. No, okay. I love that tape. You the one who started me with that, though. I can't stop using it. I love it. But anyway, y'all, we out. Peace. And Dope, we got
Peace.
actually, Dope, we increased some viewers tonight, too. It keeps going
Good.
up. That's why I'm actually waylaying, because more I talk, it's like people are coming on. I'm like, what's up with that, Dope? But anyway, that's why I was talking, running my mouth, to be honest, though. I normally run my mouth, but actually, I'm looking at the screen and people are coming on. So don't get me, because I'm
Hey,
running my mouth.
no coffee before the next week's show, okay?
And that's the sad thing about it. I don't even drink coffee. All right, y'all, that's us. The FITT Show. Financial information for today and tomorrow, Thursday, 8 p.m. Peace.